Hi there, I'm Adam Radwanski. I write about climate policy for the Global Mail. Thank you for joining us here. I hope you're having a useful and informative day so far. I'm here to lead a discussion on the evolution of the carbon offsets market, which I think is a really timely conversation for us to have. I mean, obviously, there are many, many companies out there, along with governments and others, making net zero commitments. And that means, in many cases, having to rely on offsets to do so. That market has been evolving for some time, but there remain all kinds of questions about the value of the offsets that are being purchased, the integrity, ensuring that it's not just an easy way out, but that it actually brings the reductions that our planet needs, ensuring the companies that are making these commitments are getting what they expect when they make their purchases. And I think there has been a lot of evolution recently, and there are emerging products and emerging opportunities there, both for companies and to build industries that we're going to need, particularly around things like carbon capture, to be able to hit the targets and to keep global warming under a disastrous level. So we're going to have a discussion there about how that's evolving, and we've got, I think, a really good group. I'm not going to talk for too long at the top because we don't have too much time and we have a lot to get to. So I'm joined here today by Anna Stukas. Anna is the Vice President for Business Development at Carbon Engineering, Canada. Stacey Kalk, pardon me, who's the Director of the Sustainability Fund at Shopify, and Rio Okamura, who's the Department Manager for Carbon Management at Mitsubishi, pardon me. So thank you all for joining us. We're going to get pretty deep into, as deep as we can in our time, into some of the questions around what purchasers of carbon offsets are starting to demand and what they're hoping to get, what the supply of sort of high-end premium offsets are, the issues there around transparency and accountability and the standards that are there. But I think first maybe we need to define a little bit what it is that we're talking about. I don't know how many in the audience know exactly what we mean by a premium offset, what kind of premium we're talking about, and that sort of thing. So I'm going to ask you, Stacey, since Shopify is a big player in this market in terms of purchasing offsets, to maybe just get us started a little bit by explaining to us, just to sort of defining what we're talking about here, and also a little bit of how that does fit into Shopify's business model now and what your experience with it has been and how that market is evolving.
Perfect. Thanks so much, Adam. Really happy to be here on the panel with everyone. So at Shopify, we have a $5 million annual commitment to support the most promising technologies and solutions out there. So this includes a wide range of technologies and strategies. So we've seen a wide range of offsets or credits. And when we think about premium offsets or premium credits, it's really about two things. It's about the source of the carbon dioxide. For us, we're prioritizing atmospheric capture versus end of pipe capture because we want to support those atmospheric capturing technologies that are just starting to develop that we're going to need down the road, like Adam talked about. And then on the back end, we really think about durability. We want to know how long is that carbon dioxide going to be stored? Is it going to be stored in a way that is durable? Is it going to have a high risk of re-release? And so when we think about premium offsets, it's not a dichotomy between engineered solutions and nature-based solutions. It really is about supporting a project where you're having atmospheric capture matched up with a durable long-term storage solution exceeding 1,000 years, and we're willing to pay for that.
Thanks, Stacey. I'm going to go to Anna next, actually, because Anna, you're on the other side of this equation with carbon engineering, and Stacey was talking about carbon capture and specifically direct air capture, which is what carbon engineering does. So I want to ask you to talk a bit about that. I also want, off the top here, to get into, because I think we need to discuss this. Even with the higher end options, there is always concern from the environmental side, from some members of the environmental movement, certainly, around whether carbon offsets in general are too much of an easy way out, whether they're, for companies, in some cases there are industries where it's really impossible to decarbonize. Maybe it is the only option, but is it too much of a cop-out for others, and concerns around the integrity of things and so on. So I want to both hear a bit from you about what carbon engineering does and how important offsets are to that model. But also, I want to give you a chance a bit to address that because I think it's important that we do so.
Absolutely. Thanks, Adam. And it's a pleasure to be here today. So carbon engineering is in the process of commercializing large-scale climate-relevant direct air capture. So we have a technological solution for pulling carbon dioxide out of the atmosphere. We are focused in this context on putting that carbon dioxide into those durable storage solutions that Stacey was talking about, whether that's back underground where it came from in things like geologic storage, or looking to new and emerging alternatives like mineralization and storage in concrete and other durable products as an alternative option. When it comes to that criticism, I would point to things like the IPCC report that say that if we're going to stay within the 1.5 degrees Celsius targets, we are going to need billions of tons of carbon removal by 2050 and by the end of the century if we are going to meet those targets. And, that problem is huge. And what that problem being huge means is that there is no silver bullet. There is no one single solution that is going to allow us to get there. We need very much to follow the philosophy that I know Swiss Re has put out of do our best, remove the rest. We absolutely need to be putting into place every single opportunity we have to reduce our emissions. And then we need to look to permanent removal options to deal with the rest, to deal with those unavoidable emissions. Today, we also need to focus on getting to scale, because if we never build that first plant, we'll never be able to work to drive the cost down and get this to a point where it can be accessible and affordable at that billion-ton per year scale when we need it. And that's where the role of early movers and market leaders like Shopify really come in to help catalyze that market and help us to get to that first large scale commercial plant to take 1 million tons a year out of the atmosphere or so that we can scale.
Thanks, Anna. And I want to come back to a lot of the things that you raised there. I want to bring Rio in first for a moment. Rio, I think you're joining us from California, I believe. Wanted to ask you, I mean, we've heard now a little bit from the supply side and a little bit from the purchasing side. I think that what you're doing is perhaps somewhere in the middle, and perhaps you can explain to us. I know that you've been doing work with Mitsubishi and with another company, South Pole, on something called the Next Generation Carbon Removal Purchase Facility. And I want to ask you a bit about what that is, to explain that to us, and why it's needed, and what that might say about how this market is evolving and what you're trying to accomplish with it.
Thank you, Adam. So happy to speak. Thank you for introduction. Actually, the carbon removal purchase facility, which is Mitsubishi and South Pole efforts to expand the market of carbon removal credit. Actually, why? Actually, carbon removal is an action which we need to achieve net zero, rather than the carbon reduction, rather than carbon avoidance. That's first. And second one, the integrity. Of course, we need to have the quality and verification from the market participants. Actually, we need wider market to verify this is a credible carbon removal credit. And also, I echoes Anna's point. Actually, we need innovation. We need technology. So the carbon removal action, or if you purchase our carbon removal credit, so actually it enhances the innovation of new technology, including direct capture or any other carbon removal action, emerging technologies. So I think we are very keen to expand the market participants, and also we are very keen to expand innovative action in the context of carbon removal.
Thanks. Okay, let's talk a bit about, we've heard a bit from what each of you are doing, and I want to get a bit of a sense here of the market broadly as well. And one of the questions, I guess I'll go back to you, Stacey, first here. because Shopify, interesting, I mean, it's a big purchaser itself of offsets, especially in direct air capture, but also works with some of its clients who are also interested in offset purchases. And I'm trying to get a sense, I don't know how much sense you're able to get of this, but tell us what you can, on how much you're finding that companies are looking not just for offsets, but for certain types of premium offsets. And I mean, there are more traditional types, involving things like conservation and so on. In some cases, more abatement than removal. Maybe things like permanence weren't factored in quite as much. I mean, there's different types. As we're discussing the sort of newer version, I'm just curious if you have any sense of what the level of demand is like for those so far, whether there's much specification when companies are looking to buy offsets that they're interested in this particular type.
Sure. So when it comes to thinking about whether or not companies or purchasers of carbon removal and offset credits are interested in paying a premium for those products, I think what I've noticed over the past couple of years is there's an evolution in understanding. There's been a lot of articles and research done and instances where we're starting to learn and globally people are starting to recognize that some of the traditionally accepted offsets may not be in fact providing the climate benefit that they expected them to. And so what we're seeing is companies are looking to de-risk that. You don't want to have bought offsets from, say, a forest protection project or an improved forest management project that's then subjected to wildfire if you're trying to maintain a corporate climate commitment, because now, you bought your 10,000 tons, they've gone up in smoke, and now what are you going to do? Do you need to remedy that? What does that look like to your shareholders, to your stakeholders? And so really there's this increased awareness happening that, you kind of need to think about more permanent solutions, more durable solutions, better projects, better solutions and technologies, and those are more expensive. How the rubber hits the road is very interesting because right now there's a lack of standardization within the voluntary market. You can do whatever you want to meet your net zero commitment as a company. And so we'll have to see how that all plays out. But when you have a corporate carbon footprint of a certain size and you have a budget of a certain size, the two have to meet up. And often you drive down to the lowest average price. And until we start to really recognize the value of permanent carbon removal, that price that customers and corporations are willing to pay is going to be misaligned with the quality of the credit they're buying.
Stacey, how big a gap are we talking there on the price? I mean, I'm just to put some numbers to this. What's kind of an example of the difference in price tag here?
So since we have in our portfolio of solutions, we've got forest-based solutions, soil carbon storage, we have direct air capture, we have ocean-based solutions, we have concrete, we have all sorts of things. And so some of the avoided emissions credits will be priced around $5 to $10 a ton. If we go all the way up to atmospheric capture with permanent geologic storage or mineralization or storage in concrete, like a DAC, a full stack DAC solution, then we're looking at potentially around $700 a ton. There's a massive range. And it's really important to recognize that that $700 a ton is reflective of the fact that some of these technologies like DAC are early on. And what we need to do is pay that early adopter premiums so that we can drive down those capital costs that are incurred when you're building out a facility. And I'm sure Anna can shed some light on how that all works out in terms of financing. But until we have enough buyers willing to pay that price now, we're not going to drive it down to an accessible cost and price point for everyone around the world.
Yeah, Anna, let's talk about that because there is kind of an obvious challenge there. I think I may be borrowing your language here to say it's a bit of a chicken and egg challenge in that you need the available supply at a reasonable cost, but of course, unless you have enough market for it, it's hard to develop that. How much of a challenge is that? How do we get past this problem of it being a sort of a premium, very expensive product with not enough supplies or not enough scale to really bring down the cost. I mean, it does seem like a challenge to get out of that cycle. What are you seeing there? How big a challenge is that, and what are your thoughts on how we do get past it?
Thanks, Adam. And for starters, that's why we believe so passionately about the need to be deploying our technology at that climate relevant scale. Of all of the projects that we've announced working around the world with our plant development partners, we're targeting between 500,000 and up to 1 million ton per year removal, because that's the price point where we can start to drive those costs down and have that more accessible price per ton price point. We don't talk about our full price book publicly, but what I can say is that once commercial, we are looking at pricing that can start in the range of $300 a ton and upward, depending on quantity and size. When it comes to bringing together all of the pieces that you need to finance a project like that, we look to a combination of regulated market demand. And so here, the California Low Carbon Fuel Standard that in 2019 amended to recognize direct air capture to permanent geologic sequestration as eligible to earn credits, and noting that the California LCFS credits trade somewhere in the range of $200 per ton. So the combination of that, together with the signal from the voluntary market, from movers like Shopify, that are able to say there is also backstop for the demand coming from the voluntary market, and aggregating all of those pieces together. It's then also really important to have a way of backstopping some of that market risk, looking to mechanisms like the 45Q tax credit in the US being particularly effective, and then access to capital for early plants. Things like the US DOE Loan Programs Office could be particularly effective at that. We're still working to find what the ideal Canadian alternative to that might be. But really that capital that's willing to take that risk on the first plant. And so bringing those three things together is really that critical component to being able to deploy at that larger scale that allows us to start bringing prices down. And so early commitments from the voluntary market who are saying, we're willing to say, if you build it, we will come, is absolutely critical to helping to anchor that demand.
Thanks, Shannon. I was going to ask you about the public policy response and what more might be needed. You covered that off. I'll ask Rio the same thing, though, a little bit. Whether there is, I mean, Anna mentioned a whole bunch of policies, particularly in the US, which are meant to help create this market a little bit, or at least partly meant toward that. The low carbon fuel standard, which we do have now a variation of in Canada coming in as well. And 45Q tax credit. And again, that's something that the federal government here is supposed to be working on. We'll see what form it takes exactly. But are there other ways that governments need to support this, or are there ways that you're seeing as you're trying to see this market evolve, where there needs to be more public policy support to get us over the hump, or is it are you seeing basically what needs to be there at the moment, and it's more a private sector question?
Thank you. Yeah, actually, the government is the key to introduce the carbon offsetting mechanism global scale. Actually, still, the differentiation between the carbon offset from forestation or traditional way of carbon removal or carbon reduction and the technology-based carbon reduction action is not really differentiated, and usually pricing is the same. So actually, to enhance the new technology, and also to reduce the cost of new technology by supporting new technology, I think you have to pay some premium for carbon removal action from emerging technology. So government needs to recognize the difference, and also government has to understand and also has to spread why the technology-based carbon removal action is very important for net zero. Actually, still, we need to see the understanding from the broader understanding about difference between carbon removal and traditional carbon offsetting scheme. So first thing we need to ask government should be, why don't you differentiate carbon removal?
I want to get into a bit around the sort of standards issues here. Before I do that, I'm just curious. I don't know who wants to field this one, but as we're talking about the price and the high premium that's currently being paid for these products, I'm curious. I mean, the number that I've typically seen bandied about is that ideally by about 2030 you get to about $100 a ton. Is that, I don't know if that's an oversimplification, and that maybe it doesn't need to be that round a number exactly. And I also don't know how realistic it is based on the trajectories you're seeing, or that's impossible to forecast. I don't know, maybe wants to grab that one. If not, I'll direct it somewhere. But I'm just curious if that $100 a ton number is both about right for where this needs to get to in your view in the next decade or so, and also realistic. Stacey, I see you sort of nodding. Do you want to take that one?
Yeah, I have a preliminary thought because, I mean, a price is driven by supply and demand. Like that's a fundamental concept. And if we're thinking it's going to drive all the way down to $100 a ton by 2030, then we have to massively scale supply. And I think that the amount of the supply of high quality carbon removal that's required in the market is going to have to exceed what's being projected today in order to achieve that price point. Models that I've seen are around $200 a ton. And I think what you touched on before that's missing is that government policy framework that really enables a level playing field across the market, and not just for the engineered solutions, but for all solutions. And it needs to accurately reflect the climate benefit that each project is delivering.
Anna, let me throw to you quickly there too. I mean, I know you don't want to discuss get too deep into projecting your own numbers in the future, but I'm curious on your view of this trajectory as well. I mean, are we on pace to get anywhere near where we need to be in terms of the cost, or does it really need to dramatically scale beyond where you're currently seeing it going for that to be feasible?
I think from a general rule of thumb, and this isn't unique to our technology, it's applicable to any technology. The faster and the more broadly and the more times you deploy something, the more quickly you can drive the cost down. So the more quickly that we can drive demand to increase the scale, the more quickly we'll be able to drive that cost down. We have published in a peer-reviewed paper back in 2018 a full mass and energy balance, including CapEx and OpEx analysis of the potential that our technology could reach. And in that analysis, now it's a few years out of date, we published it back in 2018, we did show that it was absolutely feasible to get to price points of $100 to $150 a ton at that nth plant stage. The question about the date at which we hit nth plant really goes back to how quickly and how fast are you deploying at scale, and how is that demand being aggregated?
Thanks. So I do want to talk a bit as well about the sort of standards here, and this came up briefly before in terms of more traditional offsets and the concerns around what you're really getting there, and there's been real issues around additionality versus whether you're paying for something that might happen anyway, around permanence, particularly when getting to things like reforestation and so on. I wonder though, in this case, this is an emerging area of technology and of purchasing options. And there are various sort of standards bodies out there and so on. But Stacey, I'll go to you first. Is there enough information available on the credibility of purchases? Now, I know it's a relatively small field out there right now, so maybe that helps. But is more needed in terms of customers here being able to make purchases where they know that the money is going to be well spent and actually achieve the reductions that they're being promised to achieve?
From an engineered technology carbon removal perspective, it's pretty straightforward to demonstrate that you've done what you've done. It's a bunch of mass flow meters. It's a irreversible chemical reaction when you get into geologic storage, and in some cases when you use mineralization. It's very straightforward to definitely trap that CO2, that 1 ton. I think we're benefiting from standards in terms of market development is that for the average company who's looking to buy high quality carbon removal, I mean, you're not going to be able to necessarily have the time, the resources, and capacity to go and do your own due diligence. You don't have a chief scientist necessarily at your company to go and make sure that, yes, that process is working, the mass flow meters are in the right place, do all of that due diligence. Where we benefit from standards is it removes that technological acumen that's required right now and puts in place a trusted review process that if that credit is generated in compliance with that standard, you can rely on it. You can trust that you're buying what you're getting, or you're getting what you're buying. But until we have a homogenous landscape in that regard, it's difficult for corporate purchasers to get involved now. Like, and to put it in perspective, Shopify in aggregate has bought 15,000 tons of direct air capture carbon removal. And that's the biggest corporate purchase altogether of any company. And that, when you think about one of Carbon Direct's plants, that is between 0.5 and 1% of the plant's capacity. And that's the biggest purchase. So I would argue that having some standards and something that companies can trust is going to enable that demand signal to really take hold in the market.
Rio, do you have any concerns around the sort of credibility or being able to verify where these investments are going? I mean, when you're looking at, in some cases, perhaps producers of emissions removal, that's probably not the right way to phrase it, but of that, maybe being a fairly early stage and essentially needing capital to get going where they're going. Is there any concern about some of these investments slipping through the cracks, about risk involved in them where the removal doesn't actually happen? Is that a concern at all, or is there enough sort of credible supply not to be too concerned about that?
Yeah, actually, I do understand that people have some concern about reliability or credibility of credit, because we need MRB. That's why we need MRB, monitoring, reporting, verification. And actually, technology can solve problem easily. Actually, my background is energy. Actually, in energy industry, everything can be monitored, everything can be measured, of course. So every action has to be measured and monitored. The same, it's a carbon removal action. If it is technology based, so easily measure and monitor the amount of CO2, and also it's a very easy thing if you have enough money to invest in MRB equipment. So I think this question is can be verified by yourself via blockchain or any other new technology connectivity. So I think new generation carbon removal credit can be verified very easily.
Okay, thanks. I'll get to one audience question here. We don't have time for too many, but I think maybe it's important because we've been talking somewhat dismissively, I guess, or maybe I have just of more traditional forms of offsets. And a question from the audience was about, while forest and natural conservation areas may be vulnerable to fires, they can also be key to preserving biodiversity, making landscapes more resilient to climate shocks, and even provide quality employment for communities. Do these co-benefits factor into what's considered to be a premium carbon offset? I'm going to spin off that a little bit as well, just to say, do we need to move on from that type, or is that part of it too? Because we're sort of talking here as though the main focus should be on things like carbon removal through new technologies, as opposed to some of the natural solutions and so on that have been favored in previous versions. Rio, I saw you nod a bit there. Do you want to handle that one? Do you still find value in those types as well, or do you think we really do need to transition more to the type of premium offsets that we're discussing here around things like removal?
Yeah, actually, simple. We need both, of course. Yeah.
That was simple. Okay, good. That was quick. We're running out of time. Stacey, do you have any other thoughts on?
For sure. And I mean, we're talking a lot about DAC because we've got Anna with us today, so it's great to have her expertise on the panel. But when Shopify is buying these credits, we do invest in forest as well as soil carbon storage, and the nature-based solutions are critical to beating climate change, and they provide all sorts of adaptation mitigation features, and those co-benefits are critical. And you have to do all of it, like Rio said, but what you need to do when you're getting involved in those nature-based projects that have potential to be reversed, you have to focus on the MRV, the monitoring, the reporting, and the verification, and the project design, because not every project in the nature space is created equal. You have to find that super high quality project where measures have been put in place to address the risk of reversal events, as well as accounting practices where you have a buffer pool created, and is that buffer pool adequate to address the expected reversal that could happen in the future? So when you're looking at those kinds of credits, again, you're going to need that expertise, because not every credit's created equal. So there are premium credits in the forest and nature-based solution space for sure. You just have to do your due diligence.
And I think it's also important to note that it's a misnomer to think that technological-based solutions don't also have co-benefits, including jobs. And because they are more land and water efficient, they actually give us the luxury of planting more trees and doing more focus on rewilding and enhancing our biodiversity and all of those other components. We don't have enough land mass and enough water to do it all with biological solutions, and we need both. We need all of the above, and they all have to work together.
Let me just ask quickly here before we're out of time. Stacey, you mentioned there that we are talking a lot about direct air capture, probably because well, it's an important form, and also because Anna's here. I wonder, Rio, are there any other types on the emerging side in particular, in terms of new technologies? Are there any other in particular when it comes to forms of carbon removal, when it comes to other new technologies that are really exciting you right now and that are also worth paying a premium for and we should be paying attention to?
Yeah, too. The first one is a kind of nature-based, but actually still we need technology because that is agriculture. So regenerative agriculture is very important and also relatively easy to understand why agriculture or regenerative agriculture is important for everybody, because agriculture is for business for everybody. And the other one is the concrete mineralization. Actually, still so many building. We have to build so many buildings, and actually still we need a construction. So why don't you use CO2 sequence to concrete? Actually, the concrete can sequence the CO2, and the mineralization technology is relatively easier to introduce. So actually, I'm so excited to see development of regenerative agriculture and CO2 sequence and concrete.
Okay, thank you. I think we're just about out of time here. I was going to ask if for words of wisdom for people in this space. Stacey, do you have like about 2 sentences of in terms of for others looking to be in the purchasing space here, of how to approach that in a way that is most constructive, a guiding principle you want to leave us with?
Definitely. And I think the biggest message is just start. Just go explore and try to buy something. And the learning experience that you're going to have through that, and to talk to other companies who have already done some, to just get out there and make it happen, to join that demand signal.
Great, that was concise. Thank you. Before we get cut off, I know there's a lot more content coming today. So I want to thank all three of you for joining us here. This was really interesting for me, and I think the general kind of, there are a whole bunch of takeaways here, but generally, the scale challenge and the bringing down the cost challenge here, and the way that both private investors need to be open to the range of options out there and willing to make these investments, and the way that I tend to focus on public policy and the extent to which government needs to find ways to help scale this in the short term, so that we can bring the cost down and make this an affordable option when it needs to be. Certainly a lot more to think about there, and perhaps more stuff for me to dive into as I cover these issues. So thanks again to all of you. I want to encourage the audience to stick around for the next session, which is corporate impact venture capital, how businesses can do more to scale climate innovation than just ESG. I'll try to stick around for that as well. So thanks again, and a pleasure to be here.
Thank you.